Hi folks, and welcome to the Meaningful Money Podcast. This is session number 371. This is the podcast dedicated to helping you put your finances in order. My name is Pete Matthew, and I'm going to share with you everything you need to know and everything you need to do to secure your financial future. I'm here to help you make sense of money. Okay, welcome back. Great to have you with me once again. Now, a couple of weeks ago, I had a great chat with Lars Kroyer, friend of the show, and we discussed his views on the pandemic and what, if anything, we should do with our finances, with our investments in light of it all. I had loads of comments and emails about that conversation and how much it helped you, so thank you for that. And today, I'm bringing back another ever-popular guest, Barney Whiter, aka the Escape Artist. So after my conversation with Barney, I'll look at a review that's been left, announce the next session topic, it's going to be a fun one, and a little ad for the next phase of Meaningful Academy, which goes live very soon. But before all that, remember, this podcast continues to be brought to you with the help of my friends at 7 Investment Management. They've been helping me here on Meaningful Money for ages. I'm so grateful to them for continuing to do so. So please check out what they're up to. They're at 7im.co.uk. That's the number 7im.co.uk. Now, Barney Whiter, the Escape Artist, he reached out to me simply by saying that he's actually pretty positive about the outlook after the coronavirus pandemic comes to an end. And with an email with that kind of approach, how could I say no? Okay, so I hope you enjoy my conversation with Barney. Remember, notes and links from today's show, they're at the show notes. It's the only link you need to remember, meaningfulmoney.tv/session371. meaningfulmoney.tv/session371. Enjoy my conversation with the Escape Artist. Hey Barney, good to see you, mate. How you doing? Bearing up in the madness?
I'm doing really well. Hi, Pete.
It's really good to have you back. You reached out to me, actually, but you beat me to it probably by about 24 hours because I was just thinking it's good to have recurring voices, I think, and particularly voices that people respect, of which you are obviously one, and voices different to mine. So it's good to have you back. Thank you for coming. So what are your sort of, how are you bearing up in it all? You know, in terms of, I think it's important to ask just how people are doing as well, not just financially, but how they're doing in the mindset.
Well, I'm doing really well. And one of the things that kind of triggered me to reach out to you is I saw that you'd done a podcast with Lars. And so I kind of made a mental note to go and watch that. And since then I have done that. And you know, Lars is always good value. I just thought he was quite gloomy. and so I kind of, I just wanted to to chat through, I guess, some of the themes that have been thrown up by what's happened, because in many ways it's kind of vindicated a lot of the principles that people like Lars talk about, people like you talk about, and people like me talk about. You know, I think it's been an interesting real world test for the principles of financial literacy or FIRE, how you want to describe them.
Stopped being academic, hasn't it? It's finally become very, very real. Been talking about it for years, and now it's happening.
Yeah, and for me, personally, this is the first proper drawdown since I quote kind of quit the corporate world. I won't say retired, that's a dirty word in my book.
Quite right.
And so I've kind of been sat waiting for the first kind of true test of my own kind of nerve, if you like, with a proper bear market. And so it's been interesting to kind of observe that from a personal perspective, and it's kind of stimulated my writing as well. But I think the kind of, for me, the most obvious lesson is just the vindication of the basics and the overwhelming need to have an emergency fund.
For sure. Tell you what, that's been easily the number one theme of emails and stuff and comments that I've received in the last few weeks is, thank God I put an emergency fund in place. It's been it's been a theory for so long. So do I really need to keep so much money in cash? It's not really working for me, and I understand that temptation, but man alive, the benefit of having cash on hand has been proven beyond doubt.
Oh, and how? And, just the reminder that, because every now and again in a bull market, kind of someone's tempted to write something like, oh, you don't need an emergency fund. Really, you could just borrow it on a credit card if you needed, or you could just do this, you could just do that, get a second job or something. And boy, what a reminder of the basics. There is just no substitute for cash in an instant access bank account with a kind of a bank that ain't going to fail. And to forget what the interest rate is on that. Just having that to hand is potentially a financial lifesaver.
Yeah, for sure. Just, again, interest rate is just completely irrelevant. I said this is not about building wealth. This is not about building wealth. It's a safety net. It's an emergency fund. Yeah, for sure.
Exactly.
So have you taken much of a beating investments-wise the last few weeks?
Yeah. So I think a sort of at one point peak to trough, the a sort of global tracker would have been down like 30 something %, and so I've kind of I've obviously taken some of that pain, but right now today, last time I looked, a sort of I'm kind of 80-20 in my asset allocation, kind of 80% equities and 20% kind of safe assets. I'm down, I don't know, 10 or 11%, something like that. So for the end of the world, that doesn't feel too bad.
For sure. Do you know, I had a conversation yesterday with a client, and she, I've used her as an example lots of times. Talk about sleep at night money, right? This client I inherited from an advisor who had retired, actually, and she said to me, I keep £250,000 in my instant access account. And, my gut reaction was to go, okay, that's a lot. But she said, but that is my sleep at night money. That is how much it takes for me to sleep, because I know that's all the money I need for the rest of my life. And it means I can forget about the other £250,000, which we look after for her. And in this conversation yesterday, so that for her is the right amount of money, £250,000 doing nothing, but for her it's the right amount of money. And so I had a conversation with her yesterday, and she said, oh, I just don't want to know about the other half, the half that's managed. I said, well, let's just have a look a minute. And she was down on £250,000. I think she was down, about 21 grand, I think. And so she was like, I thought it was going to be at least £100,000 down. I thought, well, look, this is multi-asset, proper, diversified, low-cost asset allocation at work. It really works. And I remember, without exception, in 2008, I would present clients' sort of portfolios to them, and they would take one look at the bottom right-hand corner where the sort of total was, and they'd sort of sit back in their chair and go, oh, thank God, I thought it was going to be worse than that. And it's happening again.
Yes. I think one of the takeaways for me is it's been a great test of your target asset allocation. In other words, was your risk tolerance and your risk appetite what you thought it was? And so, I'll make a confession, my kind of target asset allocation was 80-20, but kind of going into this, it had kind of crept up in the good times and I hadn't quite got round to rebalancing it. So the market has rebalanced me back to my target asset allocation. And it's just a reminder that you set that down, and it's kind of your compass.
Yeah.
And so some people will have found out during this process that their target asset allocation was too risk heavy. But other people will have said, actually, I could have taken more risk. Actually, I could have been more heavy in kind of higher expected return assets.
Yeah, the market is a teacher, isn't it? The economy is a teacher. We got to learn from these things. And for some people, it will be a reminder, like, God, I just can't cope with this. And some people, like you say, it'll be quite the opposite. Actually, if this is really what it's like in a pretty difficult circumstances, then I can push it a bit harder than this. And it's important to learn those lessons. You said sort of at the start that it's vindication that the message works, and also that you felt you were a bit more positive than perhaps Lars was. Do you want to just sort of expand on that and what you mean and what your thinking is?
Well, I think this has been it's been a test, clearly, but it's been a vindication of the need for an emergency fund. But it's all and kind of basic fire principles. But it's also been a vindication of low cost index tracking investing. And so we were chatting earlier. There've been over the past couple of years, there's always some background chatter about is it dangerous that so much money is flowing into index trackers? Is there too much money in ETFs? Will all this kind of weight of money reverse at the first kind of hint of trouble? And will that be like the rush from a crowded cinema when someone shouts kind of fire? And so there was that famous kind of Michael Berry article which kind of rattled a lot of people and was kind of much commented upon.
I had a lot of emails about that.
and guess what? Index trackers have done what they were supposed to do. They have tracked the index. They have been they haven't been kind of shut down. The Vanguard All World Equities ETF, for example, has performed exactly as you would expect it to. And I know I've kind of been trading it in some of the kind of more interesting volatile days. And so it's you've always been able to trade it. You've always been able to buy and sell it. It's done exactly what it said on the tin.
Yeah, which is encouraging. I think Jim Collins talks about, events like this very often leaving some people bleeding by the side of the road, which is wonderfully sort of evocative figure. But hopefully it will leave some people, sort of chastened perhaps if they needed to, but not out of the fight.
Yeah, well, there have been some interesting blow-ups. And so I saw that some crude oil exchange traded funds that were kind of leveraged blew up, in the sense that when the oil price fell sharply a few weeks ago, some of those funds actually had to liquidate because they were synthetic. They were backed by derivatives with a kind of an investment bank counterparty who closed the swap out, and they had to fold the whole fund, kind of liquidate it, and that's left investors with kind of chunky losses. So there are always dangers in playing with exotic instruments that you don't really understand. There's always danger in leverage. There's always danger in synthetic ETFs that aren't backed by the physical product. But if I can put it this way, your bog standard equities index tracker, which is physically backed, in other words, it holds the actual shares in the constituent companies, has performed like a dream.
Exactly as it should do. You reminded me, and I pointed a lot of people to the Mr. Money Mustache response to that Michael Burry video or whatever it was, and obviously, as ever, it's quite scholarly, that, and he knows what he's talking about far more than I do about the sort of root causes of investment prices and all that sort of stuff. And I'd sort of take a lot of comfort from that, and I point a lot of people towards that as well. I mean, oil prices doing interesting things literally as we're recording this, weird glitches because of contracts coming to an end, and negative prices for oil for space of 24 hours. And it does go to show, doesn't it, that this is a pretty unusual set of circumstances, right?
Yeah, yes. And the things that hold up are the things that have a track record, that have a history. And so the beauty of index investing, for example, I mean, the stock market's been around for 300, 400 years. Index trackers have been around for 50 years. These are not new kind of products. They've been tested before in prior downturns. It's kind of the new exotic stuff like the leverage synthetic kind of oil ETFs. Yeah, that stuff blows up.
Yeah, exactly. Usually the stuff that ordinary mortal investors don't even need to get involved with unless they really know what they're doing, and most of us don't. That's the sharp end, isn't it? What do you?
Yeah, sorry.
Sorry, no, it's fine. I was just wondering, what do you think? Given that this is unusual, right? Because this is in a kind of an event-driven an event-driven event. That doesn't make sense. This whole sort of thing has been triggered by obviously COVID-19, and that's very different, for example, from 2007, 8, 9, which it was a much more systemic thing, unwinding over still a fairly short period of time, but much longer than just the few weeks that we've seen. I wonder, do you have a view, and it is only a view, none of us know what the future holds, but do you have a view on how it might unwind once things like we see the curve properly flattening, once we see a vaccine and things like that? Any views on that?
Yeah, I mean, the stock market is not the economy. The stock market obviously looks forward, and the way I kind of first got my head around this when I was first kind of hearing about the virus, and kind of trying to process what would be the effects of lockdown. Well, the way I thought about it is this: think about the economy as supply and demand. So supply is the factories, the warehouses, the forklift trucks, the software. All of that's completely untouched and unaffected by what's happened. So the supply side of the economy is absolutely fine. The problem comes from the fact that demand has kind of fallen off a cliff because people have been confined to their homes and can't go out and spend money. And so, there's absolutely no reason why the economy shouldn't bounce back very quickly, once the lockdown has been lifted. And I think the stock market essentially was very quick to kind of figure that out and look through the dip. And that's why you saw this kind of very rapid repricing in the early stages when the stock market fell quite quickly. But equally, the stock market found the floor very quickly. It kind of processed that information and priced it very efficiently. So, from the way I see it now, the stock market is very well informed by what's going on. It's no secret. And so there's no reason to kind of expect that the stock market is more likely to go down than up in the future. Quite the reverse. Whereas if you look at something like the housing market, that's going to be a lot slower to readjust. And so, I can easily see it taking, several, maybe a couple of years for the housing market to kind of recover from the initial shock.
I do wonder if there might be some pretty significant sort of fundamental changes in the way things are done. I was chatting with a client who works for a company with 800 employees, and their offices is in St James's in London. Right? Can you imagine what they're paying for office space for 800 people in that part of the world? And they managed to get 800 people working from home. In the space of a couple of weeks, really. And this guy's fairly senior, and he was saying, look, we're really now starting to ask, do we really need all 800 people working together, or is this part of the new normal? I'm also finding people are getting in touch, and finding myself where obviously our spending patterns are being forced to change right now. Nobody's spending anything much because we can't go anywhere. I do wonder if that might not just immediately revert to back how it was, but there will be some sort of longer term changes. I know you've written a post dealing with this called Get Rich in Monk Mode. So I wonder if you've got any thoughts on all that.
Oh yeah, so essentially what the lockdown has done is given everyone a taste of what I call monk mode. So monk mode is just when you kind of spend no money. And so at various times in my life, I've kind of had periods where I just kind of clamped down on my spending and just kind of slept, worked, and then kind of rinse and repeat and go back to work the next day. And you save everything and you spend nothing. And obviously that's not, you can't live your entire life like that, but in some ways it's quite a good exercise to recalibrate your spending habits and kind of break the temptation of lifestyle inflation, which is kind of so easy to slip into.
Really
and
is.
so in some ways, like the whole country's had or the whole world has had a taste of kind of monk mode and almost the kind of fire lifestyle where they spend very, very little on kind of discretionary spending. And look, I mean, obviously, there's going to be a lot of people are just going to want to go out as soon as lockdown lifts and get drunk and go to the cinema and the theatre, and that's fine. That's kind of very natural. Others, I think, it will kind of permanently shift their psyche to some extent. So, one of the reasons Warren Buffett is such a great investor is kind of he was brought up and he saw the effects of the kind of Great Depression in America in the 20s. And so this what's happening now will influence, I think, a new generation, perhaps into some slightly better habits. So it will certainly kind of hammer home the emergency fund point for a lot of people.
You in that monk mode post, you put a great line at the start. You don't choose the hand that you're dealt, but you can always choose how you respond. That's like stoicism in a nutshell, isn't it? But what sort of nudged you to put that in the post?
Well, again, like the lockdown's is a great illustration of how we all have choices, right? So you don't get to choose being kind of locked down and sent home. So you may have been furloughed, or you may be working from home, or you may have been made redundant. So and you didn't choose that, okay? But you can choose your response to that. And in some ways, the fact that you're at home gives you total control over your environment. And so it's paradoxically a lot easier to maintain good habits when you're in control of your own environment at home. So right now, I've really cleaned up my diet, for example, and I just find it a lot easier because I'm at home. And so I've just removed the temptation from the house. Whereas if you're kind of rushing around, out in the real world, going from meeting to meeting, etc., the temptation to kind of just pick up snacks, etc., on the go, on the hoof, is much greater. So we can kind of the beauty of the lockdown and monk mode is we've got more control over our time. We've got more control over what we do. We've got more control over our habits in some way. So you could, now is a great time to kind of do all those things that you said you would do, like, classically, like learn a language or get in shape or, lose some weight, or, I mean, now's a great time, you would know this, like to launch an online product.
You're teeing me up.
No, I'm like, it is though, isn't it? Like, what an amazing time of opportunity for if you have a digital business.
Definitely, that's the case. From my point of view, it has enabled me to just reset some priorities, enabled me to crack on. Friday, 1st of May, launch of the Build Wealth phase of Meaningful Academy. Thank you for that, Barney. That was... it really is. And I'm not sure... I mean, and I think that will lead to a growth of that sort of thing. There'll be a lot more of it going forward as sort of second income streams for people. Well,
I tell you what, index investing has done its job in the sense that, for the last X years, people have been saying, these tech companies, and people, including me, by the way, been saying, these American valuations look high and the US Cape's very high, and, are these tech companies all overvalued? And in some ways, what we're seeing now is, the tech companies are stronger than ever. Because what the lockdown has done is it's accelerated the move of money kind of from the real world online, and that will partially reverse, but some of it won't. Some of that money will stay online, and those companies are in great shape.
I think Microsoft must be caning it off the back of Teams, and because it seems like absolutely everybody, every school. My daughter is using Teams with college they're delivering their lessons through it, and that stuff isn't going to go away, is it? People will continue to use it afterwards. I know we will. We were considering moving to that, we being Jacksons, moving everything onto SharePoint and Teams anyway, and it just brought it forward by a few weeks, and we're certainly not going to go back. And it's interesting times. I'm like you. I'm fairly positive. Well, I'm positive about the outlook and the impact of this whole thing on our interactions with one another and our sort of sense of community. Hopefully, I'm a huge optimist when it comes to human nature. I think generally we're fundamentally pretty good. There's always exceptions, obviously, and I think that this will lead to some resetting of opinions and attitudes. I think. Would you agree with that?
So I went for a little walk with my family around the neighborhood yesterday evening, and it was amazing. Almost every house had these kind of little kids' pictures of kind of rainbows and support the NHS, etc. And so it has kind of united people kind of against that common common enemy, and so it has kind of created this sense of community, no doubt. Goodness knows, I hope a lot of commuting gets cut out after this. I hope a lot of business travel gets cut out after this. In my corporate job, I would sometimes kind of commute, do daily trips to like Barcelona or Frankfurt or places like that. So you'd get up at 4 a.m. and you'd be at Heathrow at like 5:30, and then you'd fly there and you'd pitch for a job, and you'd be a 1-hour meeting, and then you'd be back in the cab and back to Heathrow, and then back, and you'd get home at like 10 o'clock at night, and then you'd do something horrendous the next day. And it's like, it's insane, really.
It is. It's interesting watching some of my peers sort of waking up finally to the benefit of video conference client meetings. I've been working that way for donkey's years now, but it's just so much more efficient, and it's like I say, you multiply that by every sort of sector, then I think there's positive things ahead. What do you reckon? There's an awful lot of money being pumped into the economy by the government, and that money doesn't just sort of disappear. I just wondered whether you had a view on the impact of that ongoing, with just the amount of money that's being used to shore up the economy by the government.
Yeah, again, I've seen a lot of kind of doom and gloom about like what will this do to public finances, and I've actually just written a post about this called "How the Magic Money Tree Works," because there is a magic money tree. In the sense that the government, through the Bank of England, does just have the ability to create banknotes on paper or create money electronically and pump that into the economy, and it's already done that. So that the government has kind of reacted in a way that's unprecedented, really. And there's no need, so there's no need for some sort of doomsday Great Depression, sort of a la America in the 20s and 30s to play out, because governments learned from that experience, and they know that they can create money and just pump it direct into the economy to stimulate demand. Now, there are kind of dangers if we all get kind of addicted to free money. We can't just all stay at home forever and just print the money and no one actually does any work. But I think there's lots of reasons to be really, optimistic about the policy response, and people shouldn't be kind of getting gloomy about, there's going to be some sort of Great Depression.
Encouraging. Any sort of So, final thoughts, words of encouragement or wisdom for the folks watching and listening?
So to me, it kind of comes back to, I mean, it would be really easy to sit at home, kind of binge watching the news, kind of listening to all the, researching all the kind of stuff about the virus and transmission rates, and everyone's kind of an amateur epidemiologist right now. And I just have to wonder, like, is that really helping those people? Those sort of, the amount of time they're spending kind of obsessing over the news coverage and the TV coverage and the alternative theories about what's happening. I mean, to me, it's a reminder to kind of focus on what you can control. And, the health takeaway from this is that you have a big impact through your lifestyle choices and your decisions on the health of your immune system. So, if you're in shape and you're eating clean and you're getting sunshine and vitamin D and taking vitamin C, you're much less likely to get the damn thing. And then if you do get it, to recover very, 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 very quickly. So I guess I just wonder why people don't spend a bit less time watching the news about this stuff and just a bit more time, out in the sunshine or, taking some vitamin C.
Exactly. The more I read about the Stoic stuff, folks who sort of consume my content and read my Friday email and stuff will start to see that creeping in, because it's one of my goals this year is to really sort of immerse myself in the Stoic philosophy, and just it's that response. It's just not to sweat the stuff that we can't control, but instead to really concentrate on the stuff we can, and primarily that's ourselves and our response to things, and our sort of forward response, our planning for things, and internalizing the best way to think and to act in light of what we think might be coming down the road or what is happening to us in the present, and certainly not worrying about the past. And I just found that extremely encouraging. So obvious, really, but extremely encouraging. And I like most folks, I like to be able to do something. And if it's stuff that I can't fix, that can be frustrating, but we can always work on ourselves and our response, which is just so important.
So action cures fear. One of the reasons we kind of feel anxiety is if we're not channeling those fears into action. And so just channel away, take action in terms of your kind of personal health and your diet, and just getting outside and getting into nature. And then if you've got, and then you can kind of look at your portfolio, you can look at your target asset allocation. What have you learned through the last few weeks? And the other, the number of people that I hear using kind of lack of time as, let's face it, an excuse, right? An excuse. Oh, I don't know what's going on in my workplace pension. I don't really know what funds I'm invested in. Yeah, I really should look into that, but I'm just very busy, so I haven't had the time. Well, guess what? You're locked down. You've got all the time in the world to kind of dig out your paperwork.
Don't fill it with Netflix.
Exactly.
Mate, it's good to chat with you. It's good to feel positive about this thing. I am definitely positive on the outlook, and I'm convinced that this will be a real learning exercise for people. They will look back and see how things behaved during what were unprecedented circumstances, and think, what, and cope with that. The future looks less uncertain perhaps than it used to. So I'm grateful as ever. Thank you for reaching out, and thank you for getting in touch. Sorry I had to put my headset on halfway, by the way. My AirPods died, so folks watching this will get a weird transition of me not wearing a headset and then into it. So take care, mate. Stay safe, and thanks for your time. Really appreciate it.
Always a pleasure. Always a pleasure. Thank you.
Okay, hope you enjoyed that. Barney is always good value and intensely practical. After all, he's been there and done it, right? He's reached financial independence by following some basic principles, so he's got some practical stuff to say. So I hope you enjoyed that. Thanks again, Barney, for coming on, mate. Really appreciate you. Okay, here's a review from Janine from Liverpool, who says, the Dave Ramsey for the UK. Pete is a genuinely sweet, kind and clever man. Oh, thank you, clever, I like that, and sweet and kind. Who wants to help people have better financial lives. A must listen to if you are interested in personal finance. Janine from Liverpool, thank you so much for leaving that review. If you like what you're hearing here, please do leave me a review wherever you're listening, okay? meaningfulmoney.tv/iTunes if you're of an Apple persuasion, but wherever you're listening, if you can leave me a review, please do. Helps others to hear about the show and to subscribe. Keeps me near the top of the rankings, which is always handy. Okay, just 48 hours to go, folks, until the launch of the Build Wealth phase of Meaningful Academy, the core phase, if you like. That's happening on the 1st of May. And this is the phase that deals comprehensively with building an investment portfolio, planning which tax wrappers to use, and provides access to the best financial planning tool in the world for consumers, an app called Voyant Go. So if you want to be in at the start and to get the deepest discount there'll ever be on the completed Build Wealth phase of the Academy, you're going to need to be on the mailing list. So head over to meaningfulacademy.com, click at the top to show that you're interested in the Build Wealth phase, and we'll be in touch in the run-up to launch day. Okay? Right, next time I'm going to be celebrating 10 years of Meaningful Money in a slightly understated way, given everything that's going on. Don't need to go too silly with it, but I'm going to be answering the questions that you've always wanted to ask, okay? There's still time to get your questions in. Use any of the social networks and use the hashtag AskPeteM, or reply to the announcement thread in the Facebook group, which is meaningfulmoney.tv/community. And that's it, folks, for this session of the Meaningful Money podcast. Hope you enjoyed my conversation with Barney. Any questions or comments on that, go to the show notes, meaningfulmoney.tv/session371. Hope you enjoyed it. Thank you so much for listening. I'll talk to you next time.